Yo, what up, guys? Today we'll be going over market analysis, mainly the SPY, QQQ, FAGMAN, and Tesla. FAGMAN is Facebook, Apple, Google, Microsoft, Amazon, and Nvidia. I believe Nvidia should replace Netflix in FANG, but we're also missing Microsoft, so we changed the acronym. Today, the FOMC minutes report came out at 2 Eastern Time, and the markets didn't take it too well with supply issues going into next year. Rate hike and interest rates increase fears still remain. So, going over SPY, we broke below two levels, previous area of resistance and the neckline of this double top right here. And since there's also a small gap below, I think we will fill it with no issues. Support that I'm looking at right now is this trend line from October, and there's also a level below if it breaks. Next, we're gonna be going over the triple Qs. We had this fake out on the following wedge, and we're looking to re-enter the pattern. Fake out usually lead to a breakdown or a change in trend or pattern. But one thing we do know is that it will always enter previous consolidation. Two levels I'm looking at right now is 383 and 380. 383 is a important level where it was once resistance and now became support. While also 380 being this neckline for this double top. If both fail, then we also have one final support, which is this trend line with starting from March. Onto the segment for Facebook, just like the QQQ, we had a false breakout over here, failing to break out of the downtrend, and now as you see, we're back within this downtrend and without making a higher high. The level we're sitting at right now is important because it was once a key support and resistance level. If we fail to hold this, we have a gap below to fill. And if we fill this gap, then we can possibly go back into this bottom level right here. Next, onto Apple. It is doing much better than its peers. The first level of support we have will be around this trend line, which was previous resistance. So we're hoping that this current resistance will act as support. But if this resistance fails to become support, then we have this level below, which will be the neckline for this double top. And if this were to fail, then we will have this gap below and this gap below to fill. Then on to Google. Uh, Technical analysis wise, it is much simpler, I would say. We only have these two levels that I'm watching. The first level will be this one, and as you see, it's a solid support resistance level, and if we were to break this level, then this bottom level is what we will be looking at. And this box area above is a sell zone. Moving on to Microsoft, and if you remember how QQQ looks, it looks just exactly like the triple Qs. But here we already broke the neckline for this triple top. One thing to note is that we've been selling for a week right now, and what's worrying is that we're selling on increasing volume. As you see, from resistance to a breakout support, we've had increase in selling volume, and it's generally not a good sign that we're seeing increase in selling pressure, especially into a breakout support. So we're quite bearish on Microsoft going to tomorrow, and we could possibly fill this gap and this tiny gap below. After Microsoft, we have Amazon. I'm also quite bearish on Amazon. Uh, One thing is that it's been trading sideways for 7 months, and with two false breakouts right here. Technical all point to bearish signals. First, we have this head and shoulders in which we broke the neckline, which was also an area of value. After breaking the neckline, we also broke this trend line, which formed this ascending triangle. The first target will be this small gap below, but if we take the measurement of the head and shoulders, the measured move will be 2856. You can measure the move of a head and shoulders breakout by taking the length of the head to the neckline and then adding it to the breakout. For NVIDIA, there's not much to say to this except that it looks very similar to Microsoft with this double top and this neckline, but this gap acts as the neckline. So if we were to fill and close below this gap, then expect more downside. The first soft level will be around 252, but it's like a minor support level, so shouldn't have too much weight or shouldn't have too much hope for this level to hold. And if this breaks, then we also have this gap below to fill for target. Last but not least, we have Tesla. We've talked about Tesla Monday, but we failed to get any continuation on Tuesday. We only tipped the gap above, but sellers came in strong. And after today's FOMC minutes, we filled about 60 or 70% of the gap. But one good thing is that we closed on this trend line. So watch tomorrow is we can either turn resistance into support bouncing off this trend line, or we'll break below and start filling this gap.
So how are we playing these stocks? So at every key level, we're averaging in on our leaps, our long-term options. So like a year to 2 years out, we're averaging in as it goes lower, buying more and more calls. So when it does pop, we're gonna print, play it on a short term. You can buy maybe 6 months or a year out puts, and once you get a gain on that, sell it, and you have the backup for the calls, right? You have the backup on the leaps.